Why have we put this webinar on today? The reason we've put the webinar on is because we've received a lot of questions, both technically and operationally, and also from the contractual side. So today we're going to go through, we're going to give a quick overview, a helicopter overview of exactly what's involved with the EU ETS, which is the emission trading system, and FuelEU Maritime, what impact this has on shipping. So I'll discuss it from an overview perspective, and then Helen will look into it with a deeper dive on the contractual side, and then we'll follow up with that with our experts from Verifavia, which is a leading emissions verification company who's dealt with aviations, airports, and shipping from the verification process, and then Vertis, who are pioneers in the carbon market and have been out for some time helping companies to finance investments in emission reduction. So without further ado, we'll get on to the next stage of our presentation. And what we're looking at here is what encompasses the EU ETS and FuelEU Maritime. So the emissions trading system we can see on the left, and the FuelEU Maritime on the right. This is part of a number of EU policies to reduce greenhouse gas emissions by at least 55% by 2030 compared to 1990. So that's 55%, and that's why it's called Fit for 55. I also hasten to add here that that reduction is required at the same time as fleet sizes around the world increase. So it's quite a challenge to obviously reduce GHG emissions as fleet sizes increase on a regular basis. So that's what the EU ETS is, and the Fit for 55, and that how it fits in. Now, we don't want to be all doom and gloom here, but let's be honest, the 1st of January 2024, which is when the EU ETS applies for the maritime industry, is only 39 days away. It's very close by. Both the EU ETS and the FuelEU Maritime are for cargo and passenger ships above 5,000 GT. Other vessels, such as offshore and different types of vessels, will follow later on in a few years' time, and that will be changed. We will report on that as we get closer to that period. But what we want to mention here as well, although the FuelEU Maritime, the actual date is the 1st of January 2025, the companies need to submit the monitoring plan by the 31st of August 2024, which, let's be honest, is a matter of months away. So preparation needs to be done for both sides. But what we're going to do now is we're going to look at the differences between the EU ETS and the FuelEU Maritime and how that is applied across the industry. So the EU ETS was adopted in 2003 and it was launched in 2005, but that was for various other industries, including aviation and other transport industries. It's now being used on the maritime industry as of the 1st of January. So the difference between the EU ETS and the FuelEU Maritime, it's an extension of emission trading scheme to the maritime industry, as we've discussed. It's a polluter pays principle. It promotes energy savings, efficiency, and energy transmission. And it's important to note that it's emission factor from tank to wake as opposed to well to wake, which we'll go on to explain in a little bit more detail as we go on to the next slide. In contrast is the FuelEU Maritime. However, we'd like to think it dovetails with the EU ETS in some respects. And this promotes the use of renewable and low carbon fuels in maritime transport. It addresses fuel technology, and it's an emission factor from well to wake. So let's go on to the next slide here, and we always like to try and paint a picture here to talk about exactly what's going on. So we can see here, this is basically looking at the whole supply chain, and this looks at an example for harvest crops, which are being taken to this part of the process, and then they go through the whole production process, conversion, storage, etc., etc. So when you look at the whole part of the process, and I'll refer you to this formula at the bottom here, you're looking at everything. So you're looking at the well to wake and the tank to wake. But the tank to wake part of the process is only effectively this part on the ship, where you're burning the fuel on the ship and you're propelling it through the water. So let's look at the individual elements which feed into this. So what if this is an old tractor and this isn't producing the emissions it should be? What if this power station is burning coal to make these byproducts and these conversion? And that's why we refer to renewable energy production. We always refer to renewable energy production. And this is the form of solar, wind power, or hydroelectric. And obviously, if that's feeding into this part of the chain, then it's giving you a better result overall. So that's the FuelEU Maritime. And like I say, the EU ETS is looking at the emissions part of it, the tank to the wake, but the FuelEU Maritime is quite correctly looking at the rest of the process as we're highlighting here. There's other things to consider within this. So we're looking at the formula at the bottom here again, and basically the factors it's taken into consideration are the fuel used as part of the production process and the electricity used. And the WDT obviously stands for well to tank. Then we look at the tank to wake part of the process, which is what we discussed before on the ship itself. That needs to be considered. And this is the fuel, the combustion, the fuel used for combustion, and the slip, which is a factor that needs to be taken into consideration. As we drive, just to give an analogy here, as we drive a wood screw into a piece of wood, we know exactly the distance it's going to move. But on a ship, when you're propelling it through the water, you've got various other factors at play, you know, the weather conditions, the various other inputs which will have an influence on this. So these all need to be considered. So then we've got the voluntary pooling mechanism here. The voluntary pooling mechanism, it's a regulation which provides a voluntary pooling mechanism, as it says. Under this scheme, ships will be allowed to pool their compliance balance with one or more other ships. Thus, it will be the pool as a whole that has to meet the greenhouse gas intensity limits on average. And effectively, greenhouse gas intensity is looking at the whole part of the process, the production and everything else throughout that part of the process. We talk here about non-compliance, deterrent financial penalty. So basically, ships that have a higher GHG intensity than the requirement must pay a penalty corresponding to the compliance deficit, measured as the difference between the required actual GHG intensity multiplied by the energy used. And the penalty is progressively increased if a ship has a compliance for 2 or more consecutive periods. This may be subject to change, but the compliance deficit is calculated into energy based on the actual GHG intensity of the ship, and it applies a penalty of 2,400 euros per tonne very low sulfur fuel oil energy equivalent, or about 58.50 euros per gigajoule of non-compliant energy use. There's also a penalty for not complying with shoreside power requirements. As we head into this phase, we're going to see the importance of shoreside power requirements, and that will be €1.50 per kilowatt hour. But like I say, these penalties are subject to change. The revenues from the penalties should be used by member states to promote the distribution and use of renewable and low carbon fuels. So it's important to know that those penalties will actually be made use of as with respect to research, development, and furthering this project on. So next, we look into the compliance technologies. And as we've said before, GHG intensity is the facility of including production processes. So we're looking at the FuelEU Maritime here. We're not looking at the EU ETS. Yes, we're looking at the FuelEU Maritime. And what we've done here, we've used a auxiliary, which is Edwin Pang, somebody who we deal with quite a bit. Edwin's free to answer any questions on this, but we thought we'd use this schematic to help to explain exactly what's going on. And where you can see the green here, for example, anything that's green means it's taken account for by the FuelEU Maritime system. So the kite sail system, the rig sail system, solar systems, and all of these different items within this that are green are going to be positively taken on board for the FuelEU Maritime. Obviously, then we have various efficiency items, which are in red here. So it's not to say these items aren't going to help you. As we looked at on the previous slide, this will have a bearing towards the EU ETS, the emissions trading system. But some of these emission items, what they're effectively doing is, because you're more efficient, you're going to burn less fuel, but you're not having an impact on your GHG intensity. So anything in green here is going to have an impact on your GHG intensity. And anything in red does not, but may be counted for other items such as your efficiency towards the EU ETS, or obviously we've got the carbon intensity indicator, which is another webinar, and we'll not cross them over too much to cause confusion. But that's where we are now, and that schematic should hopefully help to explain that. We'll see here in orange is carbon capture. That is a subject of debate at the moment, and obviously how you measure the carbon capture, what the quality is, how you deal with it, it's all being looked at on a regulatory level. So we may see some change there throughout the near future. The next thing I just want to bring to your attention here is on the left-hand side of the table here, we're looking at the old fossil fuels, and on the right-hand side, we're looking at synthetic. So you can see quite carefully here when you're looking that, for example, grey methanol, you're actually getting an 8% greenhouse gas increase on the well-to-wake analysis, as opposed to biomethanol and e-methanol, which gives massive reductions. And the same for hydrogen and various other LNG and various other properties. So as we move forward, we're going to see, as processes change, we're going to see these fuels having a lower greenhouse gas emissions depending on the production process. So then we're going to switch back to the EU ETS now. So the deadlines for compliance, the requirements of the MRV and the ETS compliance start on the 1st of January 2024. However, MRV monitoring plans need to be updated and assessed by accredited verifiers ahead of submission to administering authorities by the 31st of March 2024. And a monitoring plan must be in place on CETA's MRV. The next thing is, we say we've got from 2024, ship owners, managers and charterers need to prepare and submit CO2 emission reports for verification. And from January to December, at ship level, owners and managers need to start monitoring voyages, fuel consumption and emissions. At the end of this first monitoring period, they need to start preparing the ship's emissions report. And it's also very important to note that from the 1st of January 2024, partial report needs preparing in case of change of company or ownership. And Nicholas will elaborate on that if he gets the chance, depending on questions later throughout the presentation. So very quickly now, we're going to move on to our case study, which is a little bit of a look at the approximate costs for this sort of EU ETS trading. You may ask yourself, why have we called the ship the NS decarbonisation? That's so all of you are familiar with that term, and it's part of our email address for the decarbonisation working group in NorthStandard, which both Helen and I sit on. So the email address for that is quite simply nsdecarbonisation@north-standard.com. Anyway, let's look at this container ship, a typical 20,000 TEU container ship trading from Jebel Ali to Rotterdam. And let's look at how much extra it's going to cost once the EU ETS is taken into consideration. So as we said, this is just an estimate of figures. We've tried basing it off real life consumptions, but obviously there are many variables in place here. And it's important to note that companies that fail to surrender allowances will meet with an excess emissions penalty of €100 per tonne CO2 equivalent, or in addition to that, that's in addition to any EU ETS cost they would pay as shown on this slide. So quickly here, we're going to have a look at this. So Jebel Ali to Rotterdam via Suez is 6,330 nautical miles. At 16 knots, this takes 16.5 days, bearing in mind that this was quite common practice at 20 knots 20 years ago. 20,000 TEU container ship roughly consumes 100 metric tons of very low sulfur fuel oil per day, and the carbon factor we use for this equation is 3.114. So that means our calculations show 311 tons of CO2 per day. And 16.5 days at that would give 5,138 metric tons of CO2. And assuming carbon costs of 100 USD per ton, which is very possible in the next couple of years, or even shorter than that, this gives us the following equation. And then we've highlighted as well 40% verified emissions reported for 2024, and for non-EU ports, to an EU port, we've included the factor of 0.5. This will increase to 0.7 in 2025 and 1 in 2026. So basically, to round all those costs up, we're looking at a fuel cost berth to berth before the EU ETS charges came into place of approximately $990,000 US. Therefore, the new total cost will be approximately $1,092,000, which is a 10.3% increase. But remember, in 2025, that will go up to an 18.2% increase. And in 2026, that would be a 26% increase. So that leads me to the end of my calculations. Now I'm going to hand over to Helen to talk about this from the contractual angle and try and give you a bit of guidance in that area. So thank you very much, and over to Helen. Thanks, Helen.
Thanks very much, Mark, for that helpful overview of the FuelEU Maritime and also the EU ETS regulations. And good morning or good afternoon for all of those of you that are joining. For those of you who don't know me, I'm a senior solicitor in NorthStandard's FD&D team, and I focus generally on the Americas, UK, Ireland, and Nordics and Northern Europe memberships. I'm going to build on what Mark has been discussing and consider the EU ETS in a contractual context. So the first thing I'm just going to look at is who is the shipping company. Both the EU MRV and the EU ETS regulations state that the shipping company is the ship owner or any other organisation or person, such as the manager or the bareboat charterer, that has assumed the responsibility for the operation of the ship from the ship owner, and that on assuming such responsibility has agreed to take over all the duties and responsibilities imposed by the ISM code. However, we have more recently seen a draft implementing regulation in respect of laying down rules as regards the administration of shipping companies by administering authorities. This implementing regulation is just in draft, and so we do wait for the final text to be published. But from what we understand, it has been given favourable review and is now just pending formal adoption by the Commission and publication in the official journal. So assuming the wording of this implementing regulation remains as is, or more or less as is in substance, then effectively it's not enough that the ship manager is the DOC holder under the ISM code for the responsibility to pass automatically to the ship manager. The ship owner will need to expressly mandate that the ship manager is responsible for compliance under the EU ETS. If the ship manager is duly mandated by the ship owner, then they've got to provide relevant documentation to the administering authority, indicating that the ship owner has mandated the ship manager in that way to comply with the ETS obligations. And that document must be signed by both the ship owner and the ship manager. There's certain other information that has to be provided as well, but if that mandate isn't provided to the administering authority, then the responsibility for ETS obligations remains with the ship owner and doesn't automatically pass on to the ship manager just because they have responsibility as DOC holder. So while it would be expected that express agreement is set out in the ship management contract to deal with the EU ETS, where any responsibility is being put on the ship manager, the implementing regulation does make it abundantly clear that such contractual provision will need to be in place. So just by way of update, the BIMCO ETSA clause for shipman, we understand, is in the final stages of being finalised and may well be published before the end of this year. So moving on to the next point on this slide, and charter party clauses. As would be expected, in terms of a charter party, you would expect that the owners and the charterers would include a provision to allocate cost and risk in relation to the EU ETS allowances. And that's not true just for time charters, but also for voyage charters and contracts of affreightment as well. In a time charter party context, we have the published BIMCO emission trading scheme allowances clause. And I just wanted to sort of flag a few key points from that clause. Firstly, the purpose of that clause is to allocate costs and responsibilities for obtaining, transferring and surrendering greenhouse gas emission allowances for ships operating under an emission scheme, such as the EU emission trading system. So it's not just confined to the EU ETS, but also similar schemes that are introduced in the future. The responsibility for the cost and provision of allowances passes on to the charterers, and there's a mechanism in the clause whereby owners calculate and request the number of allowances required, and charterers then provide them within a given time frame. There's also provision for an adjustment to be made towards the end of the charter party for any over or under provision of allowances, as the case may be. And finally, there's also a right for owners to suspend performance where charterers haven't provided the allowances, as the clause anticipates. And that provision has been included on the basis that the EU ETS costs can be a substantial, or will be a substantial credit risk for owners. So it's to protect owners against that. What we do know from speaking to members, certainly more recently, is that a clause dealing with transfer of allowances isn't always what's wanted, and we have been assisting members to revise the clause so that it becomes a kind of reimbursement of cost mechanism instead. Also, from a practical perspective, we understand that some owner members won't have their trading accounts open at the start of 2024. And it might be some way into 2024 before they have those accounts open, which obviously impacts upon their ability to receive allowances transferred by charterers. So again, we've been helping members revise the clause so that there is a reimbursement mechanism up until the account is open. And then once the account is open, going back to the kind of substance of the BIMCO clause effectively, so that it becomes a transfer of allowances provision. In a voyage charter context, we are very aware that there are a few different ways that owners and charterers are looking to deal with the cost. So it might be that charterers will transfer allowances, perhaps estimated at the start of the voyage, and then providing for a levelling up at the end of the voyage. But we also know that some charterers have been demanding certainty at the time the charter party is entered into, such that there might be preference to have a surcharge provision or a provision whereby the cost is effectively included within the freight payment, so that as long as charterers pay that sum, that's where their responsibility ends. And then there's no kind of levelling up provision depending on actual emissions of the vessel at the end of the voyage. Obviously, in this case, it suggests that liability for unexpected delays would rest with the owners, and owners would then need to rely on demurrage effectively as compensation. Of course, much of that kind of negotiation and how it'll work between owners and charterers comes down to commercial discussions and negotiations. And also another point that will effectively come down to commercial discussions and negotiations is which emissions are actually to be counted in a voyage context. So is it just the laden leg performed under the voyage charter party, or could it also form any part of the incoming ballast leg or any of the repositioning ballast leg? So those are all points that will need to be considered by the parties. We understand that BIMCO are currently finalising a suite of voyage charter party clauses to address emission trading schemes, with a view to those being adopted in the near future. I'll move on to the next slide. And I'm going to have another look at this case study that Mark mentioned earlier, but just include a couple of extra stop-offs to kind of paint a better picture, I suppose, and perhaps bring the contractual reality to life, given that just talking about clauses can be somewhat of a dry subject. So let's assume that the ship is on time charter and the charter party between owners and charterers includes the BIMCO emission trading scheme allowances clause. The ship, as Mark mentioned, the NS Decarbonisation, is a 20,000 TEU container ship. She's loading Jebel Ali and discharging at both Tangier and then finally discharging the remainder in Rotterdam. So the NS Decarbonisation loads her cargo at Jebel Ali. However, not long after departing from the load port, she starts experiencing engine problems and has to deviate to Jeddah for repairs to be carried out. Once the repairs are complete, the ship then continues on to the first discharge port of Tangier and then goes on to discharge the remainder of the cargo at Rotterdam before ballasting the ship to New York. So which emissions are caught under the EU ETS, taking into account the various stops of the ship? So under the EU ETS, 100% of emissions from ships performing voyages between two EU ports of call will be caught. 100% of emissions from ships within a port of call in the EU will be caught, and also 50% of emissions from ships performing voyages from an EU port of call to a non-EU port of call and vice versa. A voyage under the regulations means any movement of a ship that originates from or terminates in a port of call. And a port of call is defined in the regulations as the port where a ship stops to load or unload cargo or to embark or disembark passengers, or a port where an offshore ship stops to relieve the crew. Stops for the sole purpose of refueling, obtaining supplies, relieving the crew of a ship other than an offshore ship, going into dry dock or making repairs to the ship, its equipment or both, stops in port because the ship is in need of assistance or is in distress, ship-to-ship transfers carried out at side ports, stops for the sole purpose of taking shelter from adverse weather or rendered necessary by search and rescue activities, and stops of container ships in neighbouring container transshipment ports listed in an implementing act to be adopted in due course are all excluded from that definition of port of call. So in the case study, is the voyage for which emissions are caught by the EU ETS the full voyage from Jebel Ali to Rotterdam, or does either of the stops for repairs at Jeddah or the part discharge at Tangier interrupt the voyage? Well, because stops for making repairs to a ship are excluded from the definition of port of call, the call at Jeddah for the purpose of the EU ETS can be ignored. But then what about the call at Tangier? Well, we understand that Tangier is going to be classed as a neighbouring transshipment port, which will be listed in an implementing regulation, and so that port too would be excluded for the purpose of calculating the EU ETS emissions. So we are therefore looking at the full voyage from Jebel Ali to Rotterdam, and then also the ballast voyage from Rotterdam to New York. If the NS decarbonisation was a bulk carrier rather than a container ship, then the position would be different because the call at Tangier would have counted as a port of call. And so the voyage call would be the Tangier to Rotterdam and then the ballast leg to New York. Under the BIMCO ETS clause, which I mentioned is in this charter party between the owners and the charterers in this case study, what responsibility do charterers have in terms of transferring allowances? So point to flag here is that under the BIMCO ETS clause, during any period of off-hire, the charterers shall have the right to offset any emission allowances due or require the owners to return a quantity of emission allowances equivalent to the emissions that charterers would otherwise have been responsible for had the vessel remained on hire. So if we assume that time lost caused by repairs at Jeddah was off hire, then while the charterers would be responsible for surrendering allowances for the voyage in theory, charterers would be able to remove themselves from responsibility in respect of any allowances due as a result of emissions during that off-hire period. Now I'm going to move on to the next slide and just touch upon a few final points that I thought were worth mentioning. Firstly, ship-to-ship transfers, which you'll have heard me mention fall outside of the definition of port of call when they're outside of the port. This means that STS operations will not mark the start or end of a regulated voyage under the EU ETS. In this scenario, the total emissions of the STS vessels are going to be determined by the location of those vessels' previous and next qualifying ports of call. Secondly, a call at an EU port for a crew change. In this scenario, it's only if the ship is an offshore vessel that a call for a port for a crew change is going to count as a port of call for the purpose of the regulations, and otherwise it's going to be excluded. And finally, I just wanted to mention methane emissions. While from 2024, methane will be required to be reported under the MRV regulation, it won't be until 1st of January 2026 that emission allowances will need to be surrendered for methane. And with that, I'm going to pass back to Mark and we can bring Nicholas and Frederick into the conversation as well. Thank you.
Thank you very much, Helen. Very interesting, and it's definitely interesting to hear the contractual elements there explained in detail. So the next slide we've got up here is just to bring our email addresses to the forefront. What we'll be doing after the webinar is we'll be circulating a copy of all the slides, a copy of the video, hopefully within 1 week, but it's a big job for our digital team to turn it around. So the aim is within 1 week, but obviously, as you'll appreciate, they've been very busy and they've done an excellent job of preparing these slides. So here's our email addresses, myself and Helen and Frederick and Nicholas. So please feel free to contact any of us if you have any questions. So that just says thank you for this part of the webinar. Now we're going to ask Frederick and Nicholas to bring their screens on. I'm going to stop sharing the presentation. So it will just be the 4 of us on screen, hopefully. And I'm just going to start off. Can Nicholas, followed by Frederick, could you just introduce yourself, please, and tell the audience your experience, what you're about, and a little bit more about your companies, just so that we can then make the chat a little bit more relevant. We've got questions coming in. If any of you want to please answer the questions, please feel free. If not, I'll direct them accordingly. And we've also got questions that we've been asked through the registration process as well. So we'll also bring them into the table if we have time. So with that, I'm going to allow Nicholas to introduce himself, followed by Frederick, and then we'll go back to questions. Thank you very much.
Good day, everyone. Thank you very much, Mark and Helen, for a very useful presentation. So my name is Nicolas Duchesne. I'm President and CEO of Verifavia. Verifavia is a accredited validation and verification body. We have been approved to conduct verification of emission report for operators under the EU emission trading system since 2012, in particular when the aviation sector emissions were included in the ETS, which is a bit what is happening now for the shipping emissions. We conduct 1,500 verification of emission reports for ships under EU MRV. We are also approved under IMO DCS, including CII. And we have been recently developing some services associated to biofuels or to advanced way of offsetting your emissions, which are going a bit beyond the regulatory verification required under emission trading system. We are very happy, or I'm very happy to be here with you today and to answer any question you may have about the EU ETS. We have unique expertise when it comes to the context of ETS and the setting up of accounts on the registry, as we'll discuss a bit more today, and also the operational aspects with our mandate of independent verifiers. Thank you for your attention, and Frederic, you can continue with presentations.
Thank you very much. Thank you very much, and obviously congrats to Mark and Helen for this excellent presentation. My name is Frédéric Boutillier. I'm head of shipping for Vertis. I joined the company a couple of years ago to set up the shipping desk, and I've been basically my background is shipping. I've been working in the shipping industry for 25 years, probably already too long, and clearly we at Vertis are have been trading EUAs. We are trading EUAs for the last 25 years, basically, or at least since the inception of the system, for obviously industry and aviation. And now we are now obviously already supporting various, the ship owner, obviously primarily, but also other stakeholders to get ready for the EU ETS in all respect, and obviously to get to facilitate them the access to the market, because we have a direct access to the market. So happy to answer questions and to further down the road support you guys in your challenges.
Thank you very much, Frederic. I think it's quite timely. We've got a couple of questions in there already. So the first of which I'm going to point to you, Nicholas, because I know something I think I forgot to mention at the start of the webinar is there's been various acts released, and I think Nicholas is party to these. And I know that Tangier is a little bit of an unusual port in this scenario. So could you elaborate on that question, please, Nicholas?
Yes, of course. So the idea of identifying transshipment container ports within 300 nautical miles of EU is to avoid carbon leakage and to avoid having a very small cargo operation, in particular for containers, so discharge of one container, being qualifying the port as a port of call, which would result in a drastic reduction in the emissions to report. So the question, I think, is operationally speaking, what would be the idea of a stop in Tangier, and operationally it would not make sense. It would be a stop that would be purely for avoiding to report as many emissions under ETS as expected. And in order to prevent this from happening, the European Union decided that some container ports in the close vicinity of Europe will not be considered a port of call when it comes to definition of EU MRV voyages. So the objective from European Union perspective is to basically avoid carbon leakage.
Thank you very much, Nicholas. That's an excellent explanation. Helen, the next question I'm going to bounce in your direction. I know we discussed this as a potential scenario for the case study. So I think you're well up to speed on this on the contractual side. So thank you.
Thanks, Mark. Yeah, so the question being, Will there be any allowance if the vessel is involved in an SAR mission in EU region? If no, how the cost will be allocated between charterers and owners? Also, if vessel is diverted to nearby port due to emergency incident on board, will that be considered as a port of call? My understanding is that SAR missions and calls to ports for emergency incidents don't class as a port of call. Nicholas or Frederick can correct me if I'm wrong on that. So it's going to depend in terms of how it's addressed between owners and charterers on what is included in the charter party. So if, for example, the vessel is off hire for any incident, then, for example, under the BIMCO ETSA clause, that would mean that the responsibility for allowances during that off-hire period will be with owners rather than charterers. So I think ultimately in that context, it's going to depend upon who is responsible for and whether a ship is off hire under the charter party as to whether it's going to be owners or charterers that are responsible for the allowance cost. Thank you.
Excellent. Thank you. The next
Yeah,
question.
Just to confirm that your explanation, Helen, is completely right. And in terms of reporting, what is important is for operators to monitor the extra emissions corresponding to the SAR mission, for example, to be able to then exclude that from surrendering obligations. So it has to be monitored so that the justification of why these emissions are not included in the report is clear for everyone, and it has to be verified.
Thank you very much, Nicholas and Helen. Great answers. Thank you. The next question I'm going to point to you, Frederick, and I know we discussed this earlier in the week about the extra time it takes companies outside of the EU to get the accounts in place, but also another question I'm going to add to this really is, what are the advantages of purchasing EU allowances in advance as well, Frederick? So I'm going to give you a twofold question there, if that's okay. Thank you.
Yeah, no worries, no worries. Obviously, and I think Ellen mapped the situation quite nicely when it comes to the sharing the responsibility, or actually pointing out who is going to be responsible under the EU ETS, either the ship owner or the dock entity holder. And obviously, it has to also be taken into consideration whether the technical manager is done in-house or externalized. For the non-EU companies, obviously, they will have to surrender. They are under the same obligation than EU-based companies. They will have to surrender EUS by latest September 2025 for their voyage falling under the EU ETS, clearly. For that, obviously, they will have to be follow the same rules. The only difference that they have to wait February 2024 to get the list that will be published, and by which EU will designate to them the register that they will have to contact to open the account, and it will be based on their last 2 years of call in Europe. So obviously, if the majority of the calls are, for example, in Netherlands, a Singapore-based company will have to contact the Dutch registry to open their account, and otherwise, it comes down to the same obligation than the EU-based company, obviously. Getting ready ahead of the curve and prior the deadline is obviously an advantage, because it's a volatile market, and volatility means opportunity. And I would say, it's a financial market with a financial regulated product, which somehow is controlled by EU because they are controlling the supply and demand, i.e. the fundamental balance between these two elements, and clearly EU as a target is to bring that cost towards the abatement cost, to push owners and stakeholders to move towards more energy efficiency. So clearly, moving earlier than later is certainly going to be an advantage, and not only in terms of accessing to prices that are probably going to be cheaper today than in 18 months. But clearly, yes, I would certainly recommend for owners and other stakeholders to move forward and ahead of the curve, for sure.
Thank you very much, Frederick. On to the next question, and I'm gonna take part of this up, and then I'm gonna pass it to Nicholas for the rest, because this is a question we thought we'd be asked about dry docking. So we discussed this in advance, in all honesty, to try and prepare for this webinar. And an example we want to give, a simple example, is, for example, a ship which fully discharges cargo in Korea, sails to China for dry docking, and then to Singapore for bunkering, and back to the EU for loading. The EU MRV reporting for the Korean to the EU, the stops in between do not count. So effectively, the stops for dry docking, because it's not part of the voyage, does not count. And this is for ports outside of the EU. However, if the dry docking takes place inside the EU, then the emissions will be counted within. But obviously, we're aware that emissions in dry dock can be quite limited. Obviously, you may use your generators while the vessel's at lay-by berth, and then you may shift to shore power when the vessel actually enters the dock and the dock's dry, so nearing dock dry. So there is obviously variables within that to consider, but that's how that works. Now, the scenario that we brought up there, I'm gonna pass to Nicholas, because there will still be a voyage between, in this example, there will still be a voyage. So therefore the emissions would need to be counted, but not while the ship is in the dry dock outside of the EU. That's my understanding. Is that correct, Nicholas?
Yes, so voyage is defined under EU MRV as between two commercial port of call. And the EU regulation defines what is a commercial port of call, which is what Helen mentioned. There has to be some cargo loading or unloading, or some passenger embarkment or disembarkment. If there is no commercial cargo operation, then the port is not a port of call. And so the port of call to take into account to define the MRV voyage is the port before this one, the last one where there was a commercial cargo operation. And if any of the start port or end port is qualifying for this commercial port of call definition and is based in Europe, then the voyage will be in the scope of the regulation. So if we take the example from the chat, if the last port of call with cargo operation was Rotterdam, then this is a EU MRV port of call. Then the ship goes to Tuzla, it's goes to dry dock, so it's not a commercial port of call. The emission in the port do not have to be taken into account because the port is not EU. The next voyage, which is to Milazzo, will then be have to be reported because it is in Milazzo that the cargo operation takes place. So everything in between, and at sea, will have to be reported, and the emission in a port which is not EU do not have to be reported. I hope it's clear.
Thank you, Nicholas. That's excellent. The next question, Helen, I think is clause related, so I'm going to bounce that in your direction. Thank you.
Thanks, Mark. So the question is: one major oil trader has a draft ETS clause which states that they will only pay for the laden leg of any EU trading. Is this legally enforceable under the legislation, or is this considered part of commercial negotiation? This is a commercial negotiation point. In terms of the actual legislation, the responsibility is going to be either on the ship owner or whoever is mandated by the ship owner to take on that responsibility under the EU ETS. And so under the actual regulation, then it's not just going to be the laden leg that is caught, it's also going to be the ballast leg. But from a charter party perspective, in terms of divvying up who is responsible for cost of allowances for different parts of voyages and for different voyages, that very much falls to the commercial discussions between the parties. And we are very aware that there are a number of charterers who are of the view that under a voyage charter, their responsibility should be restricted to just the laden leg. How that plays out, whether under commercial negotiations any element of a ballast leg could also be included in their responsibility, kind of remains to be seen. But yes, it's a commercial negotiation point ultimately. Thanks.
And if I can add on that, Helen, that's obviously absolutely correct. That means it surely means that owners can't just rely on receiving EUAs from charterers, because again, in some cases they will be responsible and they will have to purchase EUAs to cover either off-hire or ballast legs, for example, in that particular case. So indeed, it's very important for owners to get prepared in any case to be able to purchase EUAs. And I would say it's going to be a commercial negotiation, and the outcome will very much be if it's depending on if it's an owner's market or a charter's market, because we all know how it works, and that will be also an element to take into consideration depending where the market is at the moment of the negotiation, obviously.
Yeah, I think that's a really good point, Frederick, and I think one of the points that is very clear is the need for all parties in the chain to be prepared in terms of if there is going to be a transfer of allowances, having the relevant accounts open, because under a time charter as well, the owners aren't always going to be able to get the allowances from the charterers. There'll be the off-hire periods, there might be repositioning periods where they're going to have to ensure that they have an ability to get the allowances. So yeah, I think that's a good point. Thanks.
No worries.
Frederick, just while you've got your vocal cords nice and warm there, I'm going to bounce the next question in your direction, which is the DOC holder is authorized by the owner. Will the DOC holder need to have their own trading account or some other arrangement? How is that working practically at this level?
I think at the very beginning, there will be the need, like Ellen mentioned, to map things and to organize things in terms of responsibility, whether it's going to be the ship owner or the DOC holder being the responsible entity under the ISM code. Clearly, it's and obviously that should be clearly organized in the shipman co. Clearly, it also depends whether the DOC is internal to the ship owner or external to the ship owner. But certainly, if at the end of the day the DOC holder is the compliant entity, they will have to open, and they can certainly open a trading account or a compliance account and certainly a compliance account to buy EUAs, bank EUAs in that particular account, and then surrender in due time the EUAs. So I think it's what is most important upfront is to organize the relation between the two entities. After that, whoever is designated as a compliant entity, ship owner or dock entity holder, will have to move forward, open the account, but that doesn't prevent the owner also to open a trading account. So I think it's each and every situation is a bit of a unique solution and needs to be looked and tailor-made when it comes to EU ETS. So I think that's also something really for stakeholders to keep in mind.
Okay, thank you. I think the next question's on STS, but I think that's already been included in part of the presentation there. So I think we'll skip back to that one unless Sagu has something else to add in more detail on that. The next question is about, there's a question in the Q&A. I apologize, for some reason the Q&A doesn't seem to be working at the minute, and I'm a bit worried that if I do go into it and crash the Teams, then I'm going to pop off the screen. But thank you, because I think you've asked the question again. And the reason for 0.4 in the calculation is because 40% of verified emissions need to be reported for 2024. That then rises to 0.7 because it becomes 70% in 2025, and it would then rise to a factor of 1.0 in 2026. So that's where the 0.4 comes from in my calculation. The 0.5 is because it's EU allowances from a non-EU port to an EU port. However, on the flip side of that, if you're trading in the EU, then that factor would become 1.0, so it would double the calculation in that instance. So I think that's that question covered. Now, what would happen in the case of period?
I think that's one for me, Mark.
Yeah, it is, yeah.
So yes, the question, what would happen in case of a period charter where on the due date, charterers have only submitted part of the certificates or allowances and fail to provide the remaining ones and then defaults. So ultimately, this goes to the charter party clause that the owners and the charterers have agreed. If we work on the BIMCO ETSA clause, being the agreed clause in the charter party, then obviously charterers are in breach. Owners may be able to, depending on where you are in the charter, may be able to rely on the ability to suspend performance to try and put pressure on the charterers to submit the remainder of the allowances. If they remain in default, then that's a breach by the charterers, and owners will be able to bring a claim against the charterers for effectively what their losses are, so that the cost of allowances that perhaps owners have to buy in place of getting them from the charterers. So it's going to depend on what the charter party terms are, but it's obviously, if charterers don't comply with their obligations under an ETS clause, then that's a breach by the charterers.
Yeah, and just had to add on that, that's obviously what we call the counterparty risk, like in every charter party, and there are mechanisms eventually to get over that for an owner to buy a call option for the year, and that would certainly help to prevent themselves from this counterparty risk exposure. Again, we don't have time to get too much into the details here, but I'll be happy to answer more questions on that front, because there is a real concern about this counterparty risk when it also comes to the EUA exposure.
Thank you. Thanks, Frederick and Alan. There's another question on STS operation. My understanding is that only ports are counted in STS operation. So it's a bit like the example that Helen spoke about before, that effectively you need to count the emissions before and after, and effectively the STS operation doesn't take place. However, Frederick and Nicholas, I mean, is there any variances for different types of vessels that are not tankers, for example, that have a different designation? I have heard discussions about like floating storage platforms, for example. How is that handled with respect to this, please?
Honestly, an STS is an STS. I don't think it's gonna, whether it's a tanker or a dry bulk for light storage purpose. I think it's we are talking about the same operation, and to that extent, we could see people trying to to overcome the EU ETS by organizing lighter edge, and that's why actually the EU came forward with this 300 nautical miles proposal. It's to also kind of avoid the carbon leakage that Nicolas was making reference to earlier on.
Yeah,
Okay,
that's a good point, and there is no obligation of or the type of ship. It doesn't matter when it comes to ship-to-ship transfers. Maybe also to go a bit further and explain where the EU stands these days when it comes to shipping ETS. They plan to lower the threshold in terms of gross tonnage so that in the future, not only ships above 5,000 will be included, but ships above 400. And so this shows the ambition of the EU when it comes to shipping ETS, which is to expand it and to limit the possibilities for operators to sidetrack their obligations. So for ship-to-ship transfer, regardless of type of ship, if they do ship-to-ship operation, then it has to be reported accordingly. And in the future, the system will be more stringent and will continue to limit carbon leakage as much as possible.
Okay, thank you. Helen, the next question is related to your part of the presentation. I know the answers, but obviously since you did the original part of the presentation, I'm going to bounce it in your direction, which is to do with the ballast voyage leg.
So
I'm a little bit sorry.
Yeah, the question about in your example vessel ballasts to New York and is liable for 50% of Rotterdam to New York emissions. What if vessel does not load cargo in New York and instead ballasts to a further port? Is the vessel liable for the extra ballast trip as well? My understanding is that, yeah, you look at the kind of purpose of the port of call, not the purpose of the voyage. So if in New York, it's not classed as a port of call, so there's no cargo operations, then that will be excluded, and you would be looking at the next qualifying, effectively, port of call. So the next port of call where there is actually cargo operations being undertaken. Hopefully that answers that question.
Yeah, thank you. Thanks. The next question, I think, is because most of the others have been answered, is there a set pro forma wording for the DOC mandate? Is anybody familiar with that?
So sorry, Frederick.
No, please go ahead.
I'll be brief. The Commission will not provide any default text that can be used. This is a contractual matter between the actors, and it has to be figured out by them. Or this is the view from the Commission.
Okay. The next question, please could you clarify if shiploads in Port A receive bunkers in Port B? Discharge in Port, does the time bunkering count for allowances? I mean, I think that depends on where the ship is and the purpose of the port of call. That next question, I think, yeah, and I think that harks back to what we've been saying throughout, that it's the port call which matters. But yeah, I think it falls in line with everything we spoke about previously. We can elaborate on that separately if we need to. Do I understand correctly that owners who are non-EU entities cannot open accounts with the registry until earliest? I mean, I think this is something you spoke about before, Frederick, but please could you go again on this
sure.
one? Thank you.
It's the list will be given by before Feb, and basically non-EU based owners will have challenges to open a compliance account before that. What we have suggested at some point and stage is to open a trading account in other EU countries, and Malta was kind of pointed out as a possibility, and Cyprus, but obviously they were suddenly obviously overwhelmed with demands, so they kind of stopped to proceed them, and therefore right now for a non-EU based, the only alternative is to wait the publication of the list and to come forward to the designated registry. There is some pressure from EU in terms of time frame, so the non-EU based company will have a certain deadline to file a request to open a trading GHG compliance account, and actually, provided the file is complete and with all the necessary documents, as the entity, the public entity, the register, will have a time frame, a limited time frame to answer, to avoid the shipping company to stay too long without an account open.
Okay, thank you. And I think there's another question, which is for you again, Frederick, which is, I think the distinction to be made between a trading account and a compliance account.
Sure. The trading account, I mean, the two accounts can do exactly the same, but what we call the GHG Maritime Operator Holding Account, the official name, is the only one that can be used to surrender the EUAs and to therefore comply. So the trading account cannot be used to surrender. So in any case, a compliant entity at some stage will need to have this compliance account open.
Okay, thank you. And then I think the last question is to do with how this is going to dovetail with the IMO's approach to market-based measures. I don't know if anybody's got any thoughts on that, but the one word I'm going to use is complicated. I don't know what anybody else wants to add to that.
Challenging.
All the C's.
Maybe I can. I mean, I don't have a crystal ball, so I don't know what the future is going to be made of. But we have seen this trend of inclusion of worldwide emission system EU system evolving in the context of a worldwide system being implemented, and this is what is happening for aviation. In aviation, there was EU ETS, and now there is a system called CORSIA, which is administered by ICAO, and it's like EU ETS for shipping and IMO DCS for and IMO DCS. So what could happen is that the EU obligation will be restricted to the intra-EU voyages. So voyages between EU ports will follow the EU rules and EU carbon price. And voyages to from Europe will maybe be administered and compensated under the worldwide system. But in practice, the ambition of the EU is a lot higher than what can be agreed at the ICAO or IMO level, because you need approval by all member states. So the requirements are less ambitious, meaning the carbon price or the price of the allowance that can be used by IMO or ICAO system is a lot lower than the carbon price in Europe, than the price of EUAs. We are speaking maybe 80 euro to 100 euro for EUAs, and for the worldwide system, 5 euros, 10 euros, sometimes even a bit less. You can buy one ton of CO2 for. So, because of the big gap in compliance cost, I don't see it happening that EU system and worldwide system will be merged. But there will be a geographical application, or maybe they will split 50% of emissions for extra EU voyages that stay in EU, and the other is under IMO DCS. So having said that, of course, it will be complicated. I think that's the best answer, actually, and it will be a headache for probably all of us. But I think we have a bit of time to prepare for that as well.
Yeah, it's like anything, when anything's announced like this, it always sounds very complicated, but as you get closer to the date and you start working out various pathways, then it becomes a little bit easier to digest, understand, and hopefully deal with for everybody involved. Excellent. Well, Thank you very much. We've now run over by 11 minutes, so I'm conscious of everybody's time here. If you have any questions, I mean, we've answered all the live questions. We did have some questions during the registration process, which we tried to thread into the mainstream of the presentation. If you've got anything following that, you're going to receive all our email addresses. Please feel free to reach out to any one of us. I would like to take this opportunity, first of all, to thank everybody, all members, brokers, and everybody who's attended this and give us the questions in advance. That's what we need. We need to hear your questions and we need to try and give you the answers. I'd like to thank Helen, Nicholas, and Frederick for their expertise and for answering all the questions and helping us through this presentation. And I would like to thank the digital team and everybody involved in preparing for this webinar, because there's a lot of work goes on behind the scenes. So I would just like to thank everybody. And with that, I'm just going to say a thank you and allow Nicholas, Helen, and Frederick to say goodbye to, and thank you for your time again. Thank you very much.
Thanks very much, everyone.
Thank you, everyone.
Very much.
Thank you, Mark.
Okay.
Bye-bye.
Thank you.
Bye.